Welcome to another exciting episode of Trading Edge with myself, Terence Hove, Senior Market Strategist at Exness, and my colleague and co-host, Sihle Tuta, our Commercial Director for South Africa at Exness. Today, we're going to be talking about common trading pitfalls. What are they? How can you avoid them? And how much they cost you in your trading experience and journey. With a lot of the industry experience and personal experience between Sihle and myself, we are hoping that you might find some insights, value that will improve your trading experience and journey. Sihle, how are you doing, mate?
I'm good on yourself, Terence. How's everything going?
No, everything is well, thanks. And it's that interesting topic that we often talk about offline, and we can never not talk about it, and there's never not enough things not to talk about it, which is common trading pitfalls. I mean, you've had them, I've had them, we continue to have them. And it's good to talk about it, right? And to show other traders and traders communities out there that what they're experiencing is not unique to themselves. Yeah. So what are your thoughts about that? What do those look like? What have those been for you, these common pitfalls?
I think the list is very long and it's quite a challenge to pick and choose. But I think from the top of my head, some of the pitfalls or common mistakes that a lot of traders make is expecting to make too much money too soon.
Right.
So remember that trading is a trade. It's a business.
Right.
I think the most important thing, or what you should focus on in the beginning, is the skill rather than the money.
Right.
So I think being too much in a hurry and trading under pressure, and the pressure can come from multiple directions. It can come from the need to make the money because you want to pay rent, because you want to pay for your utilities, or because you're under pressure because of what you see online. Traders posting their blue screens, posting their profits.
Right.
And then you put yourself under pressure wanting to make the same. I think that's one. And I think two, if you're trying to be a professional trader, meaning that you want to do trading as a professional business, and I think one big mistake is to be undercapitalized.
Right.
And by that I mean you cannot expect to draw an income and trade for a living with, for instance, a $300 account. It's just not going to happen because you're going to put yourself under pressure. You're going to put your trading account under pressure to make a lot of money from a small amount. It doesn't work like that. You have to look at your trading capital and you have to be realistic in terms of your percentage returns. And then you have to calculate that, for instance, if I made 3% a month, it's 3% of what you have in your trading account. You will not double your account every month. It's not going to happen. If you do, it's because of pure luck. Right. And two, you can't sustain the type of trading where you make huge returns from a small amount. It's just unsustainable. So those are just the two that stick out for me. Expecting to make too much too soon, and obviously expecting to make a lot from little, which is, being undercapitalized. I don't know about your side.
Yeah, I mean, those are very common ones, which I think we can put them is unrealistic expectations of what trading can deliver for you. And I think that the first one for me relates to that as well, which is managing your expectations and understanding what it means. What does it mean to make $500 a day? Everyone thinks they can take trading Monday to Friday, make $500 a day, be your own boss, do your own thing. You got into the market, saw an opportunities for 10 minutes, traded, and you are done. And you are sitting on the beach and you open your laptop again. Like, some intuitive...
Money is popping out of your ears.
Exactly. An intuitive traders come in, you see, look at the market, click enter, trade, close, and you continue. No, it doesn't work like that, And hence, I think, that is an expectation that you need to know what trading is and the commitment required from it, because people marginalize that commitment. And they often look at it as a side hustle that requires very little attention, to no attention. And yet it has got so much upside that will buy you Lamborghini money while you sleep,
Yeah.
you know. And that is not what it is. And you need to create systems and processes around that trading journey for you. And I think for me, it speaks to the inadequacy. You know, people don't often invest enough time to do the things properly. So they really, some even an hour a day is too much.
Yeah.
You know, because some conversations I've been told, look, this is too much stuff. Is there somewhere where I can just go and get all of the information and get on with it? And I'm asking them, what is too much? Is an hour too much time to invest in this $1 million you are hoping to make out of this business? Because if another businessman or woman is willing to spend hours and hours a day to create $1 million business a year, what more of your trading business?
Yeah.
How much more time and effort does it require?
Yeah.
That answers the question automatically. And often is to dig deeper beyond what the lifestyle, the so-called socialists are selling you, because they're selling something. Figure out what it is that they are selling. And if it is willing for you, and if you are willing to buy that particular thing they are selling to you. Because often, you know, what it is you think you are buying and what it is they're actually selling are very different things. And someone thought they were buying a trading product or trading a training program and so forth. Meanwhile, they were being sold a lifestyle.
Yeah.
You know, so know what it is that you're buying. And I think that also comes into a common pitfall in terms of the actual trading, the execution of trades. And that was a very good example that you gave, Sihle, that you've got a $300 account and you're expecting to make a living out of that. That's unrealistic, which means you now want this 300 to become 300,000.
Yeah.
Over leverage.
It's not going to happen. It just won't.
Yeah.
And add to that, I think another mistake that a lot of new traders make after seeing some ad or some clip on YouTube and is trading with an unregulated broker. That is one of the biggest mistakes you can make. Is to take your hard-earned money and deposit it with a broker that's unregulated.
Right.
You don't know who the people behind this company are. You don't know where they are. You just have an Instagram account or a website, and yet you're trusting them with your money. At the very least, a broker that you trade with needs to be regulated. Now, the reason why regulation is important is because should you be in a position where you can't access your money, or you feel aggrieved for whatever reason, then the regulator can play the role of a mediator between you and the broker. So it's very important that you trade with the broker that's regulated, because the regulator can hold the broker accountable in a case where there's a dispute. So do not trade with a broker that's unregulated, because your risk, your capital is at risk, more than just the risk of trading, but the risk of the people behind the company misappropriating the funds, which belongs to clients. Another one is to trade with money that you cannot afford to lose. Now, by that I mean, obviously, everybody has a different risk appetite, but do not go and take a loan from the bank to trade with. Do not take money that you need to pay rent at the end of the month to trade with. Do not trade with money that you're going to need immediately, thinking that you're going to spin it and you're going to double it, and then it's very risky.
Yes.
Right? If God forbid you lose your money, your life should not be affected a lot, right? Because if your life is affected negatively because you've lost your trading capital, then it means you should have not been risking those funds to begin with, right? Yes, money can be made, but money also can be lost, right? It's a double-edged sword. Trading cuts from both sides. So be very careful with the funds you use for trading. Rather use money that you know is sitting there, excess funds. Don't take money from your kids' savings, school fees, and stuff like that. You don't want to do that. So always trade money that you're comfortable losing. Obviously, you don't trade to lose, but money that you're comfortable losing, that your life is not turned upside down should you be on the wrong side of the trade that you took. So yeah,
Trade that you took.
yeah.
Yeah.
So yeah, I mean, look, there's a lot. I mean, on this topic, I mean, the mistakes that people make. I mean, we hear stories of people meeting, suspicious characters on social media, online, on WhatsApp, and people saying, "No, look, give me your money, I will trade for you," and then people just gladly give away their life savings. Do not give anyone your money to trade for you or to invest for you unless you can verify their identity and unless you can verify that they have the correct license, which is issued by the regulator, which allows them to trade on your behalf. Okay. At Exness, we don't give financial advice. As you know, we don't trade for clients. We just provide the platform because we are a technology company. We are a multi-asset broker. We provide for the platform for speculators to speculate. So after you've made your trading decision, after you've decided whether you want to buy or you want to sell, then you can use our platform to execute your trades. So anyone else who says to you they are trading for you, they're giving advice, and they're associated with Exness is likely just trying to make you part ways with your hard-earned money. Right. We don't provide financial advice. We don't trade for clients. We don't manage funds. And people who do that on their own, and they should have a license. And you have a responsibility to verify the identity of anyone who says they trade for clients or they're giving financial advice, especially in the name of Exness. You can obviously maybe approach some of our staff if you're unsure about anyone who claims to be associated with us, and then we can help you obviously verify their identity. So do not give your money to anyone to say they're going to trade for you or they're going to invest on your behalf without verifying their identity to ensure that they have the correct license, which is issued by the regulator, because we don't do that at Exness.
Okay. Well, Sitle, one thing that I know I've had a conversation with a client, unfortunately, around such circumstances, where, like the earlier point that you made, where they traded money that wasn't theirs. Don't trade money that's not yours. If it's rent money, it's not yours. If it's this money, it's not yours. Don't trade what? That money. It's not your money. And unfortunately, this particular individual, it was money that was loaned. So heaven knows the amount of, or the terms around the interest rate repayments, especially when it's not the usual formal structures such as the bank, which you have also said, don't go and borrow money to trade, because it's not exactly like, oh, you take X amount, you spin it, it will become 600,000, you pay it back, easy peasy, and you move on. And they were so stressed that regardless of how much knowledge I was imparting on how to set up the process and how much it took time, the question always came down to, just give me a signal that I can use to make this money back. So even in that circumstance, they were not aware that they could easily double their losses, right? Not just deal with these losses that you have, but you can also double them. Because even if you get this signal, it's not going to work 100%, and it can amplify the losses again and put you in a worse predicament that you then sit back and say, oof, that was actually better than where I am now. So these are very fundamental things that, go unnoticed, but often put people in a lot of pits, pitfalls, as we called it, in this trading experience and journey. And it ends up making it undesirable. And people then use comments such as it's a scam, it's a frenzy, because of the channels that they've used and the promises of quick money. I mean, this is not just in the world of trading. There's investment schemes
True.
where they call them Ponzi schemes, where people can be,
Duped of their cash.
Yeah, duped of their cash. So it exists in different forms. In the most established of corporates, we've seen that time and time and again. So it's not unique to tradings, which is great to also point out. And on that note, Sihle, I just want to thank you for sharing your insights and hoping that our viewers and listeners out there do take these points very, very seriously. In summary, trade with a regulated broker. It safeguards you. Do your homework, know what you're buying, and buy exactly what you intended to buy. Number 3, understand what the trading journey is before you get into it. 4, and most important, don't trade money that is not yours, that you don't have. Build the capital and enjoy the trading experience because it's your own trade, as Sihle said, at the end of the day. With that, we'll leave you with that. Thank you for tuning in, and it's bye for now.
Cheers. Bye-bye.